Hello and welcome to the Banker's View from Cyboss video series, looking at all the hot topics here in Sydney. I'm Joy Macknight, Deputy Editor at The Banker, and I'm joined by Janice Dang, who's Head of Global Transaction Services at Bank of America Merrill Lynch in Australia. Janice, thanks so much for joining us today.
My pleasure.
What would you say are the main cash management challenges for corporates in Australia?
I'll start with disclaiming that Australian corporates don't just operate domestically. Many of our corporate client base have presence regionally as well as globally. And the challenges that they experience here in Australia, as well as across the markets and the region, are primarily around risk management. I mean, there's continuous focus around currency risk, interest rate risk, liquidity risk, jurisdictional risk. And the next area is really keeping up with the pace of change. Pace of change in terms of what's happening in the geopolitical environment, but also pace of change as far as regulatory changes and how to actually navigate the regulatory changes that's taking place in one market across to another. And last but not least, working capital. The theme of working capital as a challenge has been around for a long time. I think over time, corporates have gotten better because there are tools and services out there, as well as access to data and insight to help with making more informed decisions. Having said that, there's always, here's your working capital challenge, here's your working capital target. As you achieve your working capital target, is there an opportunity to continue to be a lot more efficient? So those are the themes that we're seeing, and we're really here to help our clients be a lot more advisory and sharing of ideas as to what's out there, what's latest, what's relevant. Because latest and greatest doesn't necessarily equate to what's relevant. And it's been interesting being here the last couple of days at Cyboss because you hear about a lot of new technologies, emerging technologies, and technologies that are realities for many of us, including our corporate clients. But the challenge that corporates have is there's so much optionality out there, but which one is actually really relevant? Like, do I need to deploy artificial intelligence and robotics, or should I really looking at optimizing my accounts payable, functions? So those are the key themes that we're certainly, in discussion with many of our clients.
There seems to be a growing interest in corporate cards. Why is that?
Well, I think firstly, Australia is a highly digitized economy. Unlike certain parts of the world, the United States including, we're not grappling with the issue of checks. There's not a lot of checks that get issued in the marketplace. Australia has been fairly innovative in that the tap and go pay with functionality on your card has been in existence for many years. And in fact, card usage it's predominantly in everybody's life, on a daily basis, as well as in corporate customers' lives. So because of that, the adoption is already there. The openness to embrace cards as part of doing business exists within the corporate environment. Now, of course, there's a lot of benefits in putting a transaction onto a card. The most obvious is risk management and control for travel and expense purposes. But more and more, we're seeing that shift from core T&E management to B2B transactions. How can you put your next largest utility bill, your tax bill, your professional services bill, or direct expenses onto a card transaction? And what does it actually bring to you? I mean, is there working capital efficiency? Can you stretch your DPO out? Is there an opportunity for you to efficiently reconcile and automate the end-to-end process? And thirdly, is there an opportunity for potentially fraud prevention because you manage as a corporate end-to-end that process from when you process an invoice to when a transaction gets put onto a card and potentially 50 days out when you ultimately need to settle. So, all of that is really driving corporates to want to look at cards as an additional channel to make payments and to manage their end-to-end AP procure-to-pay process. And I think equally as important is what the regulatory environment has done here in Australia, and that is really reducing the interchange rate for card settlements. Now, when you reduce interchange rate, a lot more suppliers will be open to adopting cards as an additional avenue of accepting their collections.
Okay, and I know in Australia, obviously, you've come in with the faster payments earlier this year, and most of it is aimed more at the retail side. But what kind of impact will faster payments have on corporates, and what kind of benefits can they expect to gain from that?
Yeah. So I talk to a lot of treasurers, and the one thing they say to me is, I don't wake up feeling excited about wanting to pay someone instantaneously. That's just not something I do. But I'd love to wake up knowing that I will get paid immediately from my customers, and I will have access to liquidity. So where I think the power of real-time payments in Australia and across the marketplace is in the fact that you're going to get a lot more quicker transaction flows, right? You're not necessarily needing to pay your suppliers more, but you can pay in increased frequency. Data that comes with it is going to be critical as far as insights, analytics, as far as reconciliation are concerned, and then access to liquidity ultimately. So in its current state and form, the new payments platform, it's very much a peer-to-peer settlement infrastructure. But I see a lot of potential when we introduce additional overlay services to help with the ability to request for a payment, as well as the ability to send attachments and invoices, such that within 5-10 seconds when a payment is made and settled, you immediately reconcile your books and apply cash. And then corporates can start focusing on doing what they are supposed to do, and that is to grow their business, grow the bottom line, grow their top line, and ultimately improve their overall client experience.
Excellent. Thank you so much for your insights, Janice.
Not at all. Thank you.